Alright guys, Gen Z Ricer here, and today we have a massive portfolio update video. And yes, the title is accurate. I don't want people telling me in the comment section that I'm crazy, because I know I am. Obviously, I'm taking all these risks because I believe that the risk to reward ratio is in my favor. I wouldn't have invested so much money and gone into debt if I didn't believe that this would work out. And with all things in life, it takes money to make money, and scared money makes no money. Obviously, if everything plans out correctly, I'm gonna get ahead in life, right? If it doesn't work out, then well, we got problems and we just lost a year off of a life. Currently, $129,000 in portfolio value. You look down here, $42,000, but that's not cash, guys. That's margin. We didn't even make a video saying, hey guys, I just opened up my margin account. Look at me. They gave me $117,000. No, guys, we're in $74,000 in debt. 74K in margin already. We were a kid in the candy store. We just grabbed everything we could. 48% margin buffer. But yeah, guys, we went crazy, and we're going to get even crazier. You can go to the portfolio right here, spreadsheet, and well, you see everything here. We got a lot of things here. It's 5 charts basically. You got one over here in the very corner, 2, 3, 4, and 5. They all do different things, and I'll go over them right now. And to be clear, you're not watching me for financial advice. You're watching me for entertainment purposes, because you are going to see me either make a lot of money, or you're going to see me lose my life savings at the age of 22. We're not talking about $1,000. We're not talking about $5,000. We're talking about over $100,000 at 22. Think about how much compounding that could do in VOO, for example. So this is a big risk that's going to hurt us big time if it doesn't pay off. We're either making a lot of money, or our portfolio will blow up in our faces. So if you want to see this, then like and subscribe and follow my journey. Also spread the channel. Anyways, right here is initial and margin investment. So this right here is everything I invested, which is $117,000. It generates $5,100 per month, and it'll take 22 months and 3 weeks to break even alone. Right here, we're 60% leveraged already. Out of a 125K portfolio, we are generating $4,200 per month from these shares in margin alone. And the margin invested $75,000, and it'll take about 17.6 months to break even. You can scroll over to right here, and you can see this is the YieldMax schedules distribution. So we know ymax pays weekly, so 780 throughout every week, and the individual distributions. So NVIDIA pays once per month, and it's on week B. So assume week 1, 2, 3, and 4. Then NVIDIA pays on week 2. On week 2, we're getting $1,100 from NVIDIA. So in total, it's $1,800 per month on that week. It totals out to $9,340 per month in passive income from YieldMax. That's insane, guys, because it hasn't actually registered in my head yet. This is more than what I make per month at my day job. If this maintains for years and I'm able to divest from something risky like YieldMax into something like VOO, SCHD, JEPI, JEPQ, even SPY, then because you know those aren't going away anytime soon. YieldMax, we don't know. It's only 1 year old. But if we're able to divest a bunch of money into something safer, then we are going to be in such a healthy position. And that's the goal. I don't plan on being in YieldMax for 40 years. The plan is to make so much money in cash flow and then start investing into VOO, SPY, all the safe stuff, right? The normal stuff that people invest into, not the high yield, high risk stuff. This says entire portfolio total income. So as I expand my portfolio, you know, JEPP, JEPQ, YMAX, SPY, then my entire portfolio that includes stuff not YieldMax. So this is my weekly and monthly income. As Gen Z Raishiro, I'm making this much money per month from my entire portfolio. That's what this quadrant or square is about. Right here is distribution allocation. So pretty much it says if I'm making $1,000 per month, then $800 or 80% of it goes to YieldMax, essentially. You can see $140 XDTE and $60 SPY. SPY is a new position in the portfolio soon. Essentially, if the market crashes, and this is part of risk mitigation, I don't want everything inside YieldMax. If YieldMax goes down in a correction, it's probably going to be like a rock falling. And so most YieldMax funds, we haven't seen weather out a recession yet. It's not dumb to invest into something safer like XDTE or SPY. It's smart. To be honest, when you compare it to my portfolio, which is 99% yield max and what 60% leverage, yeah, buying something like XDTE, which is NAV stable, or something like SPY is being smart in my terms. And so, pretty much, if there's a hierarchy, we all know YieldMax is the riskiest because it pays the most in distributions. Next up is XDTE. It's safer than YieldMax. After that, you got your JEP and JEPQ, but the thing is, the distribution on JEP and JEPQ is too low, 9% on Seeking Alpha at least. So if you factor in taxes and margin interest, then you're losing money, if not just breaking even. So it's not worth it. This is why we're looking at SPY, because if you look up here at distributions, they pay about 48 cents per month, and it totals out to, if I can just find the overview, about 11% return, 12% return. So there's more of a gain if I use margin on SPY. And I like SPY because if you look at the chart, assuming there's a recession and things go down, it has shown that it can go down in price but go back up. There's a bigger crash right here in August, and it's able to bounce back and keep going up. You can see on the 1-year chart, we're up 7%. And yes, guys, I understand total return with YieldMax. I understand that. But some people don't focus on total return completely. Some people want portfolio NAV appreciation. If the stock market crashes, then something like Tesla will probably go down and not come back up. Maybe. I can't read the future. But assuming it doesn't go up, that's why we're investing into something like SPY, because if you look at the chart, it can go down, but it can go back up. So if my portfolio gets a 30% haircut, gone down 30% in value, at least I know having SPY, this will help me go up in price over time, helping me bring that low portfolio value after a crash, helping it slowly go up over time as the S&P 500 goes up over time. So yeah, so that's why I got SPY and XDT. And again, XDT is for the NAV stability. It pays weekly also, which is very critical for my strategy. I'm not investing blindly. I'm investing with intent, with a plan, with a strategy. So to be clear, I'm not just getting into debt for no reason. There's a strategy here, guys. All right, we gone over this, and that. So this is the critical square right here. This says my margin available to invest is $35,000 because I'm not going to invest all $42,000. Now, we're 60% leveraged right now. If we use this right here, we are going to be about 80 to 88% leverage in margin debt. We're going to get 20% YMAG, 5,000 MSty, 5,000 Kony, 5,000 YMax. This should generate us $1,600 per month. Now guys, if I go 88% leveraged into YieldMax, then we are going to be generating $11,000 per month in passive income. And I know some guys are going to be like, oh, well, the distributions can go down, so your numbers might not be accurate. I am being very conservative with my numbers. What I mean by that is my numbers are conservative. So you got right here 4,500 shares of YMax generating $2,700 per month. And that's because YMax generates about 15 cents per share per week. So you can see 675 times it by 4, $2,700 per month. Now, the actual average YMax distribution is 20 cents per share. So 0.20, which is 20 cents per share, times it by 4,500, times it by 4. So the actual average income from YMax is actually $3,600 per month in YMax. This is what I mean by being very conservative with my numbers. If YieldMax's distribution actually falls by 25%, then my portfolio distributions and projections is going to be 100% accurate at that point. You should always be conservative, not at face value. And, you know, the most important metric in my portfolio is the time to break even. To break even on my initial investment is 22 months if it's my cash alone, but because I use margin, it'll take 10.5 months to break even on this initial investment. No one knows if a market crash will happen, but my I guess psychology or thesis is that you can do two things. Either invest slowly, and if the market crashes, go all in. Yes, but what if the market crash never happens in 2025? Plan 2 is go all in at the start and make as much income as possible and pray that the market crash doesn't happen 2 months down the line, but it happens maybe 8 to 9 months later, in which case I would be able to pay off my initial investment and I'm in house money. At that point, because I didn't wait to put my money into the market to get it to work for me, because I went all in at the very start, it had the time to build up distributions and to pay itself off the $117,000. And again, this is $11,000 will make me break even in 10.5 months, but the actual income we're making currently on average, the real value is 12,500 if not more. YMAX alone, because the projection is 25% less, that alone will increase my income by $12,500. So even assuming crypto does good next year also, so our passive income per month is $13,000. 117,000 divided by 13,000. Our portfolio might take 9 months to break even. But for now, we're going to say 10.5 months, assuming we use 88% leverage. And guys, it's going to be quicker than 10.5 months to break even. The reason being is because when I invest my distributions every week and every month into YieldMax, XDT, and SpyEye, these shares I get from my weekly and monthly distributions will also start generating me passive income that's compounding. So even though it'll take 10 and a half months to break even on my initial investment, it could be way quicker, maybe 1 to 2 months quicker, just because I'm reinvesting so much of my money. Now, real quick, I want to talk about risk mitigation because people are going to say I'm crazy, but I told you guys the risk to reward ratio is in my favor, in my opinion, assuming there's no crash next month. So yeah, you already know my core position is in YMax. We got what, 5,200 shares of YMax. We're making a lot of money monthly. Assuming we get into a margin call because the market goes down, we got a couple things in our portfolio that are helping us weather out margin calls. For one, I'm saving all of my paychecks, and so if margin call happens, I can pay the margin call off with my cash reserve. Number two, I'm making so much money weekly and monthly that this can go towards every week towards paying down a margin call. Number three, I don't need to reinvest all of my distributions. As you can see, if I make $10,000 per month, I can reinvest $7,500 of it, so 75%, and put 25% of my distribution towards paying off my margin debt. So slowly over time, my 88% leverage will go down to 70% to 60%. So there's that. And number four, you don't want to do it, but if you need to, you can sell shares because these aren't exactly my shares. It's Robinhood shares. So I'm just giving them their money and shares back. But yeah, between money on the sidelines and between so much money coming in weekly from distributions, I believe I'm able to weather out any margin call from Robinhood. But yeah, guys, that's pretty much my portfolio. I want you guys to tell me what you guys think about it in the comment section. I already know I'm crazy, but what are your thoughts about it? Again, guys, scared money makes no money. If this works, it's gonna pay off so much in the long run. Are you guys also super leverage or are you using 10% leverage? What are your thoughts on anything in the video? Comment it below. But yeah, guys, that's pretty much it for this video.